Hi everyone, today I'm going to explain chapter 24 in the book International Financial Reporting by Ellen Melvey. So this is segmental analysis. So segmental analysis is, here we can see segments and analysis. So it's analysis of information of the segments. So when we say segment, let me explain this. I have a large company, and in this large company we have segment A, segment B, and segment C. They are all components of the same entity. So what is the international standard that is concerned about the segments? You need to know, this is the first thing to know, is IFRS 8. IFRS 8, the international standard, is requiring, I'm going to use the arrow to clarify that, I'm going to require companies, the large companies, to disclose information about different segments, operating segments, okay? So they need to do the information, disclose them in the note of the financial statements. Why? Right, why this? Because we have different companies, large companies, they are involved in different activities, different economic environments, different profitability. So for example, I have this profitability and risk, they have different risk, they have different returns. So that's why instead of having, for example, this X has X revenue, we want to know what is the revenue of this separate one, B, C. We need to know the different information about different segments to know, so the user of the internet for financial information knows how to make the judgment, how to make an informed decision about the company, instead of knowing only one figure, which is not enough. So when he knows the information about each segment, each operating segment, he knows the past performance, he can conclude, for example, the trend or futures, he knows from which we have the more losses, more things like that. So this is why IFRS 8, it's all about disclosing. IFRS 8 is all about how to disclose this information about segments. But IFRS 8, before starting, it defines what is operating segments, and the operating segments, the ones that should be reported. This is I would like you to know. So operating segments. Okay. So operating segment, for example, we were having the example of A, B, and C. So the IFRS 8 said to us that we need to have this one, the segments mentioned in here, operating first before you disclosing them. This should be the operating. And it did mention three main things for the operating segment to be disclosed. I'm going to put them here. For the operating to be disclosed, there is three things. Should be activity on this, should be an activity in this the segment. For example, revenue, should be revenue earned, okay, revenue earned in this segment, and there is expenses incurring in this business. And the second thing, there should be someone reviewing them, okay? There is an entity reviewed by the entity chief operating decision, okay? Entities chief operating decision maker, okay? And this one can allocate resources, can review it, see the performance, assess the performance of the segments. It can be like the manager of the division or anyone like that. So then the third one, for this segment to be operating, the third thing, we need to be able to get separate financial information from this segment. Once we have separate, like every segment has their own financial reporting. So separate, let's write it here, separate financial information available, okay, about the segments. So once we have this, we are defining it as operating segments, and then under IFRS 8, this should be reported and disclosed. But there are some things that you need to know, which is an operating segment. In general, an operating segment is reportable, should be reportable to be in the disclosed. What do I mean by this? It needs to be significant, generating significant amount comparing to the total of revenue or total of the company assets or to total of the company profit to be like important for us to disclose it, because the company has so many segments and some of them, they are not significant, they just generate not material amount, just small amounts. We don't need to disclose all the information about them. We can just add them sometime under general segments or other segments or something like that. So that's why for it to be reportable, there is another term in here defined by IFRS, which is reportable segments. Okay, reportable segments. This reportable segments, actually it's an operating segment. So there are two things. They are defining it. The information is disclosed in the note to the financial statement. The following rules are used to identify an entity's reportable segments. The first one, we can two or more operating segments may be combined into one operating segment if they have similar economic characteristics. So this there are like two can be combined to be reportable, and they have similar characteristics, like similar product, the nature of the product, or the distribution method or something like that. And another thing that I'm going to emphasize in here and talk about is reportable segment is a single or combined operating segment which meet any of the following quantitative threshold. I'm going to talk about this quantitative threshold. Quantitative. Okay? So this threshold is 10%, first 10%, second 10%, and third 10%. So if you go to the segments in here, what are these 10%? They are tests. So they need to fulfill this test. So the asset, for example, when I'm talking about this, I'm talking about here, revenue, profit, and then here assets. Okay? 10% of the total asset of the company. So the segments, for example, revenue, the segment, I'm going to just use the arrow again. So segments revenue, one, I'm just talking about one by one. The segments revenue or profit, or I should be 10% of the total revenue, or the segment profit should be 10% of the total profit, or the segment asset represent 10% of the total. When I say the total, I'm talking about all the segments, okay? All the segments that are in the company. So once I have this 10%, I should be only 1% satisfied. It shouldn't be like all of them. I'm looking just for one of them. If one of them fulfilled, that's fine. I say, okay, this segment, for example, A, it does represent 10% of this. Okay, it's a reportable segment. Means I can disclose more information and separate detailed information as required in IFRS. Okay? IFRS 8 to be disclosed in the notes, right? Then there is another thing, don't forget about it. Once you have these things, right? You have to do a test of 75%, which means you go to the external revenue, you do 75% of it, and then you do the sum of the reportable segments and see if they represent 75% of the external revenue. I'm going to show you how to do this because I have an example in here. And see, for example, you have you done the test and the segments doesn't have any 10 of this percent. You see, you don't include it, or you include it under other segments, as I said. So here I have a picture that with an example. So this one, okay, if you look in this, and it is actually in the book, okay, here we go, you can see here. See, for example, this is the example of a company that has different segments. You can see in here, can you see segment A, B, C, and carry on. So we are concerned about three things, as I said in the test. The 10% we are concerned about revenue, right? And we need to say the profit, and I need to see the asset. Okay, there are kind of different things that apply, but it's kind of the same thing at the end. So we need to see this test, if it satisfies the first 10 tests, the second 10 tests, or the third one. So we're talking about revenue. Okay, let's go to the revenue to this company. I'm going to have two things, external and I have internal. External with external customer, revenue generated from external customers, and generated internally just between them, like segments between them or departments between them. So actually we have two sales. We need to add this to this to have revenue, total revenue, right? Once we have this plus this give us the total revenue, I need then to do 10% of this total and compare it to this ones. When I say this one should be this plus this, this plus this, this plus this, and that, carry on. So in the example, when I did this plus this, I have 17.2 million, and the 10% of it is 1,720. Like, don't forget we have 3 zeros in here, okay? You need to add them to kind of come to these figures. So we have this, and 10% of it is this and this, okay? So actually, if we take off this one and compare 1,720, I'm gonna go for this one. It's easy. Let's go to segment B. You need to do it to every segment. So I'm gonna go to segment B. I have 1,460 and I have 0, so the sum is 1,460. I compare it to this one, 172. It is less than 172. Then I'm gonna write no. I'm gonna write in the revenue. I'm gonna show you the table at the end, because the table should has like revenue, profit, and asset, and you should put yes or no each of the tests. For example, the test revenue, first test, you can say no, it doesn't satisfy, it doesn't reply to this test, okay? Then I'm gonna go to profit to check again. Profit, how we deal with profit is separate, because we have gains. As you can see, we have this gains. No, sorry about that. That's not a gain. We have this gain, and we have this and this, and have like another ones with our losses. So you need to do summing the gains together and then go and sum the losses together, okay? You don't sum everything. Once you do the gains, which we have here 1.55 million pound from the gains, and I have from the losses, I have 0.27 million from the losses, right? Yeah, I have 0.27 from the losses. I'm going to see here, I need to do 10%, okay? This is the rule, we need to do 10%. To do 10%, you need to use the greater one. So because I have losses and I have losses and I have gain. This is the losses, the sum of losses. We need to see which is the greater one. The greater one is this one. Then I do the difference, the 10% of this one, and put it here and compare all of these ones to this one. We're going to ignore this minus, okay? We're going to ignore this minus. And when I see compare which one is the greater, I don't care about minus in here. This one comes from loss, okay? For example, this one comes from loss, and this one comes from gain. I'm going to use the 10% of this, even if it is loss, okay? So just in case it is loss. Now I'm trying to say that we don't care about minuses. I'm just trying about number in between the brackets. So then I put this 10% of this one, which is 10% of it, which is the 10% of this one is 155,000 pound, right? So then when I have this one, I need to compare it to this one. I have 155. Ignore this 3 because I have it here. Let's ignore it. So let's say 155. I have 155. So 720 is more than 155. More, it should be at least 10% or more. So more than this 10%. So let's say, yeah, I'm gonna say yes in here. Then 160, it's more than 150. Yes, even it is minus. You can see even it's minus, I'm gonna say yes because I don't care about it. 60 less, no. 120, yes, I'm gonna put yes. 120 is less, no, and carry on like this, okay? So this is it, how I'm going to deal with this type of things. So assets, straightforward. That's it. I'm gonna go for this, do the 10% of it, and then I have like 1525000, which is like a and then I compare this to all of these and see if yes or no. For example, this yes, this bigger, and this bigger, this one no less than this one, and carry on like this. I have at the end, I have the table of them where I can decide. Okay, this is where I'm going to show you the end table, how it should be looked like. So should look like this one. Sorry about that. Yeah, here we go. I have this one available. So this is how it should be. The revenue, as I said, the loss and asset and reportable segments. Okay, which one should be? Then I have first, you need to see this one. So I'm going to just do the, because we already done this. This is how the 3 tests. Okay, so the 3 tests, first we can see that there is some of them having no already, so we exclude them, so we don't need them. Reportable segment, no, I'm not going to report it because it's fair. Should be at least 10%, at least one, yes. There is nothing, so I should go, no, I'm not gonna report it. Another segment, C, no, it fails all the tests, so I'm not gonna report it. I mean, report it, disclose the information in the. It's significant to disclose the information in the financial statement, the note of financial statements. So here we have all yeses, yes. We have yes, no, still have no's in here, but yes, because for one of them, that's it. This is how we do it. And then once we finish, we've done all of these things, we need to check with another 75% test. 75% test, what is it? So the 75% test telling us, I'm going to go back to the one I just did with you. So you need to go to the external, didn't say internal, external, just external, right? See this external one, this external, this one, I'm going to do the arrow. So this external should 75% of it, only this revenue, you do 75% of it. And 75% of it is, in here we have it is 9.33 million, right? 9.33 million. And if you go, I'm just going to go back. So I don't need this one. Photo. I'm just going to go back to the one I did with no and things like that to show you the 75%. How is it? Yeah. Sorry about that. Just I want to make it clear in here. Yeah, here we go. So for this one, I have 75%, and I need to go to the segments that are yes reported. For example, this yes. I'm just gonna go to their external revenue and add them together. For example, add the 340 and then the 14B, 1460. This external revenue should be added together and see if it represents at least 75% of the total external revenue or more. So when we did this sum, we find out that when we add them together, it's 9.33, and 9.33 is 9.34, and when we compare to 75 of the total external, it is more. So then we say it's reportable, then it's okay for us to report it and things like that. So that's it. This is the main thing, but we have some kind of things you need to know about the disclosure. This is the test, how we report the operating segments. For the operating segment to be reportable segment, this is the test we are doing. The thing you need to know again is another thing is disclosures required by IFRS 8. So this is kind of a theory more. You need to know that you need to include information, general information about the basics about the company, and 3 things you need to be included: the factors used to identify reported segments, which factor did you use, and the second thing, judgmental in applying these aggregations, and the type of products. Okay, and another thing, second thing, so this one I'm gonna say general information. Okay, info. Second thing, you need to disclose information, info about reportable, okay, reportable segments. The information about reportable segments, there are many things you need to do. For example, the liability, assets, external revenue, internal revenues, expenses, depreciation, income tax, explain the way in which the segment profit of loss, segment assets, measurement, and explain the basis of accounting. So all of this, every information about the segments, reportable segments, need to be included. Okay, and then another thing, the disclosure should be a reconciliation. Okay, reconciliation should be as well. And how we do this reconciliations, we need to do the total. For example, have segment A, B, C, and D. See the example. I do the total of the revenue, the total of the profit, the total of their assets, and the total of the liabilities, right? And then I'm going to go to financial statement, the entity, for example, the total of revenue of this segment, I'm going to reconcile them to the entity's revenue, total revenue, okay, in the financial statement. And same with the profit. I'm going to do the total of the profit and reconcile them with the to the entity's profit, and the same with asset and liability. That's it for reconciliation. It's straightforward. And the other thing that should be disclosed by the IFRS 8 is the entity, right? Entity-wide info. It's about the whole entity information, because the entities should report, for example, in the entity-wide information, we have like kind of things that should be, main things that should be reported or disclosed, like the products and service. The entity should report its revenue from external customer for each product and service. Of course, if that not gonna be costing much. And geographical areas, they have to disclose the revenues from different geographical. For example, the company is operating in China or operating in America. They should be given the percentage of the revenue from this one and the revenue coming from this and things. And the same with the non-current asset, should be located to this and this and that. Okay, they should give this table or the information about different revenue from different geographical areas and non-current asset located in different areas on an entity home country. Okay, and another thing, we talked about product, geographical areas. Now major customers, you need to include major customer that representing account for at least 10% of the entity's external revenues. Then should include the fact about this major customer, the entity about customer. It's not like a requirement, so the entity is not required to disclose the identity of major customer. This is everything actually you need to know about the IFRS 8 and segmental analysis. That's it. So hope you like it, and hope so this is, I just want to show you, this is the reporting, how it should be, like reportable segment, revenue reconciliation, geographical area. So yeah, this is it. So I hope you enjoy it and subscribe for more videos. Thank you.